CNBC TV 18 presents the AI Dialogues in association with IBM.
Hello and welcome to AI Dialogues, a CNBC TV 18 presentation in association with IBM. I'm Lata Venkatesh. Now, a lot has already been discussed regarding artificial intelligence's transformative potential, and we have consistently sought to bring diverse perspectives to the conversation on AI. Today, we take a deep dive into the critical aspect of responsible AI, from risk to trust, exploring how organizations are navigating this delicate balance. As AI continues to revolutionize the financial landscape, this transformative technology is reshaping how we approach compliance, how we manage risks, and build customer trust. Yet, the journey from risk to trust is neither simple nor straightforward. It's not just about innovation, it's about building systems that are equitable, transparent, secure, and resilient in the face of evolving challenges. From fostering customer confidence and meeting regulatory expectations to ensuring operational scalability, the stakes are high and the path demands precision and foresight. Our panel of industry leaders today will shed light on how they are leveraging artificial intelligence to lead this shift responsibly, addressing biases, strengthening governance, and preparing for heightened global scrutiny. Together, we will uncover the strategies, challenges, and the opportunities that define responsible AI in this new era. Joining me today in this discussion are four industry stalwarts: Yogesh Garg, the Chief Digital Officer, Kotak Mahindra Bank; Tushar Patankar, the Chief Risk Officer at Yes Bank; Amit Talgeri, the Group Chief Risk Officer at Axis Bank; Dinesh Vijay Kumar, General Counsel, IBM India. Gentlemen, thank you very much for joining me in what I think is a seminal conversation. Well, Yogesh, let me start with you. Now, at Kotak Mahindra Bank, if you can give me instances where you have already applied AI. Just give us some concrete instances so that we lay people understand.
Thanks for having me here. Excited to be here and share what we are doing or working on in Kotak, specifically on the AI space. So right now, the first use cases that we are prioritizing, it's about employees, right? So how can we make their jobs easier to take good care of our customers, right? So they don't have to go through like multiple systems, figuring out, diving deep into the processes, notes, SOPs, and whatnot. So that is like the goal number one. The second piece is around hyper-personalization. So how can we produce information that is relevant to customers and not, something that is irrelevant? So there are building blocks that we are focusing on and building. The third aspect or the use case for AI is around the risk management, working on the ML models that can predict, how we can minimize the risks for the company and also, make that process of approval faster for our customers.
Okay. Tushar, can you make it a little more micro? I mean, is there a specific instance where you'll have applied, you're the Chief Risk Officer, so is your credit committee able to take some decision more easily because of what you have developed for them?
Thanks for calling me here. To begin with, I think when one needs to understand that banking is highly regulated, right? So, and AI is an exciting space to be in, but it's yet to be tested in its entirety. So, what we've decided at Yes Bank is not to jump into it headlong and try to automate or use AI completely all over the place. And RBI also has certain rules regarding credit decisioning on automation of credit decisioning, because RBI's logic is very simple. If you're using it for credit decisioning, you need to explain how you reached that decision, what went into taking the decision, and not all AI or ML models you will be able to reach that conclusion because they keep changing based on the data which goes through it. So today we don't use AI for decision making, but we definitely use AI in different parts of the bank. One is we use AI on the propensity models, propensity on what a customer could buy from us, customer on how we can target a customer, what's the likely, and then we make a hyper personalization of the offer that we can generate for that customer, depending which part of the country or what his needs are and what we've seen at our end based on the data which is available. The
So
second,
basically, if you get, say, a home loan customer, you check what more you can.
I will check what more I can do. I will check what will excite him for the home loan with me, right? So because as Yes Bank, I'm not the cheapest provider in the market, right? So I need to do something which is different. So I will try and hyper personalize my offer for him, which might not be as price competitive like the larger banks in the country, but maybe faster on something else. I may give him a little more leeway depending on what his likely needs are.
So, Amit, if you can tell us, what are the specific instances that you have been able to reduce risk, say?
So, first of all, thank you for having me here. Uh, First of all, in terms of credit risk models, if you see a large part of retail lending today is happening basis models. These models use multiple parameters, and more importantly, we use information which is both internal and external before deciding a loan. So one of the reasons why models have been very prolific today is because they allow you to take decisions faster, quicker. You have 10-second loans, you have 1-minute loans, and all of that. But the bad side of it is to ensure that you are also ensuring responsible usage of those models. So the whole AI in terms of both building of the models and validation of the models becomes equally important. So from a risk point of view, one, do we have the right model when we are lending, and especially in a retail environment where you're dealing with mass customers and multiple profiles is one use case that we have. The second is in terms of the validation of those models to ensure that we don't have biases around those models. We are ensuring that the diversity of the customer profiles that we have in the country are all, in a sense, tried to capture in those models. So we've used AI in a lot of these model builds and the model validation as well. The other is on normal digital transactions, the digital frauds which are happening. The way those transactions are happening. Are you doing a lot of recharges today, which are very different from your normal payment patterns? Are you doing transactions which are not consistent with the profile that you had, submitted to the bank at the time you opened the account? There are scenario building that we are actually doing to ensure that the right customers get captured in terms of giving the right messages as well. So these are two use cases from a risk mitigation point of view.
Dinesh, at IBM, you guys make it simpler for the bankers, or you empower the bankers to reach their decisions. Now, our panel has raised several issues: customer satisfaction, customer identification, mule identification. Where does IBM fit in? How do you make it easier for these guys?
So firstly, AI, as it integrates into every part of the business, it presents both significant opportunities, but it also casts significant responsibilities on people who are using it. Trust, fairness, a lot of other aspects. And there are a lot of views which were shared today in terms of people having to be cautiously optimistic, and that's really what RBI is told. In fact, the governor had recently said that you need to be cautiously optimistic. And that's fair, I think, and that probably goes to also a couple of other points made in terms of what are the use cases? Where do you test this, right? Probably you start using this in areas which are low risk, right? So probably start from there. And I think a lot of that has been done. For instance, in the HR space, I think a lot of work has been done. Now, once that's done, RBI also has said that there are other places that we could probably use AI, and rightly pointed so in terms of the cyber security related issues, anti-money laundering, KYC, a lot of use cases which have been identified by the RBI themselves in terms of where we could use. And also what this really comes down to, and we're talking about really important industry, right? It's not general use of AI. We're talking about a financial industry, and therefore we need to be a lot more aware of what AI are we using, right? Was it responsibly built? How was it trained? A lot of these aspects go into so that you can stand behind it as the chief risk officer, chief digital officer, CIOs, and so on and so forth, that yes, we've used a trusted AI to really benefit our organization, both and clients.
At the moment, there is a lot of conversation that you don't have to have collateral lending. You can have cash flow lending. So is there enough technology available for bankers to on the ball guess whether cash flow lending at what point is perhaps it could become a bad loan? Is that much available?
Yes, I think there is enough information available in the market, right? Data, they say, is oil.
Yes.
right? But I call data as crude oil.
Oh.
Crude oil on its own can't
Superb.
do anything.
Okay.
It needs to be segregated, needs to be cleaned up, needs to be refined. So a lot of data which is available on you, me, and everybody in the market, which you can call it as alternate data, or you can just say it's a cash flow based data. If you use the data sensibly, you will be able to identify, is this customer likely to default and pay me my EMI? The simple rules which are earlier was, what is he paying to me and what is he paying to others? But things have gone beyond that, right? We use apps. Apps allow you to get additional information of the customer, and there is other information on what kind of social life he's living, and there is enough service providers on that front,
Yes.
on what he's doing with his money. Those things help you on the collection front as well. When you see too much of spend happening on that customer, maybe you need to understand now, just putting him on a call center when a bounce happens is not good enough. You need to be standing in front of him. If his salary is on 3rd and the bounce happens on 3rd, I need to be standing in front of him on 4th to collect the EMI. If I'm not there, all likelihood, he will just use the money away.
Oh, excellent. Okay, so that really brings home the point. You want to add to that, Amit?
Not just in the retail side, but if you look at the SME segment, which is a large portion of where you don't have publicly available information, the whole early warning signal models and AI there in terms of both internal data mining and external information becomes a very good source to kind of ensure that we can, one, either exit, reduce exposure, or exit an account completely. So, from a customer point of view, you're also ensuring that there's churn in the account. You're ensuring if there's any unusual transactions, related party transactions, because those are really the first signs of trouble. So your models need to pick up some of that, and that's where AI also helps us in those models in terms of early warning
So
signals.
it actually makes
It does make
cash
sense.
flow lending possible because of the tools available. Yogesh, I wanted to ask you, in Kotak Mahindra, you also have the advantage of being a group,
Right.
with multiple companies giving you information about your customers. Are you able to therefore make products more precise? You have a stream of customers from securities, from mutual fund. Are you better able to integrate?
I think that's again, it's a step-by-step process. First, and the foundational aspect is about knowing your customers, for which you need to have a unified data, platforms, so that you can really understand who is this customer, what kind of life they live, are they riverboat traders. See, once you understand different personas, then you can say, okay, these are globetrotters. The travel credit card is more relevant for them. If they are riverboat traders, so a demat account or a wealth management solution is going to be more relevant. First, you know your customer, then show your customers, and then if you understand, then you can say, okay, do they have higher affinity towards digital or versus assisted channels? So you kind of guide them through both.
Now, Dinesh, I wanted to ask you, these gentlemen have given me a range of use cases. IBM obviously services globally. Are there use cases not yet prevalent in India which IBM can bring?
So probably I can use Europe as the example. So we have a cloud which is ready for the financial sector, but again, the market was ready for that. Now the sentiments and the guidance, the laws as well, is still evolving in India. As much as the financial institutions are cautiously optimistic and we want to go along with the journey, we are also kind of trying to see, how do we build, how do we cater? What are the financial institutions? And we're actually working very closely with financial institutions to understand where do they really want to get, right? So what really helps is doing POCs and helping them understand identify what are those use cases which are relevant, which is not necessarily a lift and shift from what we've done in Europe. So I think that's the journey that we are building on. But we do see a lot of good traction, and hopefully the regulation and the use cases, all of them come together to build a stronger story for India.
Okay, so on regulation, let me take off on that issue, because a big regulation is just waiting to happen. The DPDP Act has been passed, but its start date has not yet been mentioned by the government. Yogesh, how ready would the bank be?
I think it's an evolving experience. As a bank, we are always striving to meet the requirements, first is of our customers, because they're trusting us with their money, their data, information. So how are we doing that? and then of course of the regulators, right? What are the regulatory requirements? And you continuously strive towards, meeting those regulatory environments, and then eventually, exceed those and protect customers even more. So as and when, more and more regulations come in around AI, of course, it's still a journey of deployment also. So not many
What is
banks
your
are like
best
ahead.
guess? You think the banking system will be prepared for it? I think it's going to impact the banks most. Although it's DPDP Act is for everyone.
Yeah, I think it's about being proactive. So at Kotak, we are being very, very proactive about what's coming ahead, what's currently in, and then investing on those infrastructure, the models that we've been talking about ahead of time, so that we can be exceeding our expectations of regulator as well as our customers.
What is the state of readiness of the sector, even if you just don't want to mention about Yes Bank?
I think the sector started working on this a year back, realized what was happening in Europe because of the GDPR requirements which came in. So it is not that the DPDP guidelines which came in here were a bit of a surprise. We all knew what is coming our way.
250 crore was a surprise.
That was in a way, but it was still better than what's there in GDPR, which is linked to profit and a multiplier of that, which can go into billions of dollars at times. But to answer your question, I think we've all been working towards it. Are we ready? Maybe the answer is no. But definitely we should be ready by the time the act comes into force. And as a first step, will we be completely ready to ensure that all data of a customer is only there in one place and he says, delete my data, I can press a button and delete it? I don't think that's going to happen as a part of the phase one. But I think we've all have been taking care of our data. Data which is at rest, data which is in transit, moving to our vendors or otherwise. We've all taken precautions on how to manage it, how to store it safely, what are the kind of security systems we need to build around it, and how do we use it. Usage of the data, I think, is going to be one of the big challenges, because the app that is there on your mobile downloads everything at the back end. The SDK keeps running continuously. There are no restrictions on that. With DPDP coming in, there will be multiple restrictions which will come. So you typically use that data and build a ledger earlier to know how good or bad your customer is. All those restrictions are going to go away. Post that, life is not going to be as easy as it has been for the past few years for the fintechs, which have been using that data exclusively for this purpose. And it's going to be more a challenge for them, because thankfully we are we use dated technology banks. The larger banks like us, we still use paper. And so we have a lot of data which a customer has given himself, consented to give, has signed on that. So I think our challenges will be to digitize that and use it for future purposes.
So is this the place where you can help the bankers?
Absolutely. So I see this in two parts. One, in terms of IBM as an organization, IBM as a service provider. IBM as an organization, I think we have an unfair advantage simply because we're present in other countries, and for standardization, a lot of practices have been imported, and we already do a lot of things, right? But of course, there is that delta. There are things, additional steps that we need to do. We've already studied. We know to a certain extent what we need to do. Of course, we'll have to look at the rules. There are additional things that happen in India, for instance, CSR. We invest quite heavily in terms of education, minors who are involved, right? So the entire consent, how do we really handle? So there are a lot of complex questions that we need to still figure out, and that's really what the government's also struggling with before they can come out with the rules, quite understandably, right? So they're all working through that. Now, coming down to the banks or any client for that matter, and this is really our bread and butter, working with our clients to figure out what their issue is. How can we solve this through technology, right? Really understand, because this can't be done manually. It necessarily needs technology. And I think it's probably a silver lining as well, especially in the context of Gen AI, where we are talking about, right? Because there's no Gen AI without information architecture, right? So I think that's very clear. So in some sense, we are all also saddled with so much of legacy data. So it gives us a good opportunity to clean up data, to really bring this into a proper structure, and really use the data to your advantage, right? So I think I see this as a fantastic opportunity. From an IBM perspective, of course, we do look at this. We already have a lot of solutions in terms of Cloud Pak for data and so on and so forth. Again, as I mentioned earlier, so while we have a lot of these technology, we also bring in consultancy as well to help them actually make this entire journey and
To
really
handhold
help
the
them
banks,
handhold
as it
them
were.
through
Oh.
that.
Okay. I mean, Europe is widely believed to be, almost the gold standard in terms of protecting privacy. So if you all have serviced there, it should be perhaps a cut-paste job in India, you think?
Largely, right? I'm hoping.
Lift and shift
But
is what you
yes,
said.
but again, you don't want to restrict it so much where it's not really relevant for India. So I think those are the aspects that we need to really figure out that, and probably it's not a restriction, but we'll have to figure out if it really fits in the same manner,
Or
or
it
what
has
are
to
the
be
things,
adapted.
how do we have to really adapt for the India market?
Do you suspect, okay, let me ask you, Yogesh, that a lot of financial literacy has to be done?
Yes.
It's not just banks, you all will be the evolved parts of the system, but people may be unwittingly giving away information.
Yeah, I think it's about being very, very transparent with your customers when you are getting their consents, for how long you're getting it for. Is it a one-time data pull or is it like a regular data pull? Depends on the relationship with the customer also, right? And they'll give consent and you should also give them an ingress to they can withdraw consent, right? So they can manage their consents. So it's all about, again, anchoring at customers. Because as a customer myself, I would not like, banks to keep calling me, banks to keep pulling my data, keep pulling my credit, and then just bothering me. But when I want something, right, if I'm interested in buying a home, that is the time I would like banks to reach out and saying, okay, here are the home loans that we could give you. Here is the interest rate. Here are the other add-ons. So those are going to be very, very important.
So you think that when the privacy rules come in, it won't be that you're going to lose customers because of that, because the upcoming generation seems willing to share.
They are more than willing to share, I guess, what they have. And that can be a challenge. And we are seeing then even sharing of OTPs, for example, right? Which is a huge problem. So it's not just about literacy. Even highly educated people end up sharing their OTPs, and that creates a problem on the other side. Similarly, on the Gen Z, since you raised the topic of Gen Z, now that's one of the risks which is there when you're talking of AI and Gen Z. Not too many people realize that Gen Z wants a use of convenience. They want everything to happen very fast, right? And as I said, we are a highly regulated entity. Now, if I have a coder in my team who's a Gen Z, he expects that I should allow him to use a ChatGPT or any other for coding his thing. As a bank, I can't allow my code to be put into a public domain from where it will be. So now I put restrictions on what he can do. What's the end result? He leaves me and he goes to a software company. But this is the population which is going to be my employees over a period of time. I need to manage that risk and reduce that attrition of the Gen Z and manage that expectation on how they still need to take cognizance of the law and the regulation.
Let me ask you another question that keeps bothering me. You guys are spending a lot on AI, both in terms of time, bandwidth, and money. When do you see the returns? Because I don't see it in the bank's cost to income. If I look at the latest results, it's not as if costs are falling. When do you think you all will start harvesting it in terms of bottom line gains?
So to start with, I think we are still in investment mode. There is no doubting the fact that we are at its early infancy in that sense in terms of investments, especially on good use cases. However, having said that, there are a few cases where you genuinely believe there are, advantages which are already flowing through. So for example, I talked about credit risk. The fact that some of these investments in AI, etc., is also ensuring early detection of risk. So you're not waiting for a 6-month or a 12-month period. You are looking at risk as early as 30 days, 15 days, 60 days, etc. So that's early detection. So in a sense, it's also preventing NPAs, it's preventing early detection, will ensure.
So those gains are there.
So those gains are there. That's one. Second, digital frauds. Again, the reason why you're also seeing a large number of customer dissonance is because the increase in frauds, which is increasing. So that's another use case which is looking at. The third is, I think one part which we've kind of missing is this is going to take time in terms of it's not going to be very tangible initially. And one thing we do need to keep in mind is that today most investment is going in terms of either improving customer service, is in terms of improving experience, getting new business, etc. But there will be coming a time when you're also going to be looking at responsible AI. How are you preventing frauds? How are you preventing slippages? How are you preventing risk in that sense? And that's not just financial, it's also reputation risk and all of those. So that's the fine balance that I would probably say that's where we are right now in terms of stage of evolution of AI and responsible AI.
Since Dinesh, I would assume that you will be the authority on this. You've seen multiple banks, multiple countries, multiple ecosystems. When will AI start helping the bottom line?
In terms of what's the cost benefit, and I think there were answers in the question, in a lot of points which were made there, right? It's not just about generating profit, but it's also about how we're preventing losses, and that goes really to your bottom line directly, right? And really, and also about asking ourselves, right? As in, would I prefer going to a company which is more digitally, or a bank which is more digitally enabled? Absolutely, there's no doubt. I don't remember the last time I went to a bank, right? So that's really the journey that I see. It's something, it will pay out in the long run, but it's an investment which everybody needs to make.
Okay, now finally, to wind up this conversation, I want to ask each of you, how do you interpret the word responsible AI?
I think it's not a 100-meter sprint, it's a marathon. So it takes time, to build the right infrastructures, right models. You have to make trade-offs, whether you're going to invest in large language models, which is very expensive, or small language models, and so on, which use cases you're going to prioritize, and then go carefully about implementing one after another so that the customer trust is protected all the time, because that's the business we are in. Right?
Absolutely. I think that's great. No short-termism. Look for.
Yes. And the cost to expense ratio point also, right? It's a marathon, as I said, right? It'll take time for the results to come in. It won't happen overnight.
Sure. Tushar, how do you understand this?
I think for me, ethical AI would be having models which are transparent, which are fair, where biases are removed from those models, and hence the final decision or the outcomes which come from it are transparent and fair to everybody. Because otherwise the tendency is to have biases in the model which can create a way. So to build an AI which you can use for your customer service as well as decision making, and be able to explain that, is what I would term it as a responsible AI, as far as I'm concerned.
Fair point. To you, Amit. Responsible AI means what?
I think the way we look at it is that if each of these, whether you're fair, you're correct, or you're ethical, is translated in terms of either your policies, your processes, your frameworks. We did talk about that whole data part of it. While we as banks with our infrastructure, we will invest in AI and responsible AI, we do need to keep in mind, we do also work with a large number of partnerships. We work with a lot of vendors. So it's important that we also ensure that the whole ecosystem is also doing responsibility in terms of protection of the same customer consent, fairness, ethical. So for us, it's a combination of not just what we do in terms of fair, correct, and ethical, but it is also what our ecosystem, where the bank is, exposed again to all of those, elements, is also part of it. And we are being responsible for it, is part of what we consider responsible AI.
Finally, to you.
All right. For me, it's fairness, robustness, transparency, explainability, and privacy, right? So these are the 5 pillars that really we operate on. And of course, we can go into a lot more detail, but fairness is important, right? It's really about the points that were made to really wipe out those biases, really,
yes.
and really being clear about what are the data sets that we use to train the AI, right? So all of this becomes very important in terms of what's the base that you're using to really help you with your process. Because if the base is really not sound, that it's going to affect everything. Now, in terms of responsible AI as well, it's where is it going to be used? What are the use cases? And IBM, several years ago, we had set up this ethics board, right? And it's not just about where we look at what we as a business do, what are the engagements that we do, in fact, even clients, right? There are some use cases we may not be sure, and therefore it goes through our organizations to see, is this the right thing to do? We don't take a short-term view, we take a long-term view. And AI, of course, the other important point is really transparency. For people to be clear about what are they really using, what are they really working on. And there's no way we can buy trust unless we are transparent. So a couple of these things, and of course, robustness, when I say what do I mean by robustness, is it's also that we've developed an AI, right? So there are always bad actors. And if somebody interjects or kind of there's a cyber attack and somebody tries to play mischief, is your AI going to fall simply because of one player? No, it needs to be robust so that it's hardy, it knows how to behave, and that's really important. And privacy as well, I think enough's been said about privacy, but that's fundamental in terms of every design that we do. Privacy is at the center of what we do.
You know what, Dinesh, I feel reassured after I hear that people are working towards such very important principles. It is said that technology is overestimated in the short run and its gains are underestimated in the long run. We may find that we are in a very different and much safer and much more comfortable place because of AI. Thank you very much, Yogesh, Tushar, Amit, and Dinesh, for an extremely enriching conversation. That's it on this edition of AI Dialogues. Thanks much for watching.
CNBC TV 18 presents the AI Dialogues in association with IBM.